How are you going to make up that additional 8%? You're going to charge more, right? And that charging more means that it costs more, which means what? Inflation. So when we're talking about interest rates and why they actually matter and why financial professionals, whether you're a CFO of a company, whether you're the CFO of your own one-man shop, why interest rates are important is because everything has a cost. And when it comes to borrowing money, the cost is the interest rate, right? And the 90-day T-bill, not to get too deep, but I'm getting too deep, the 90-day T-bill is effectively what's known as the risk-free return, the risk-free rate. And that's what everything is measured against. So if the 90-day T-bill is trading at, say, 3%, you need to be paid for the risk you're taking. So if you're a company, a small company that has bad credit, no credit, and you need a loan, they're not going to charge you 3%. They're going to charge you something higher, 5%, 6%. Where before interest rates were 0 and you could borrow at 2 or 3%. Now you're borrowing at 6, 7, 8%. So there's an actual cost of money. Now, how are you going to make up that 8% spread? How are you going to make up that additional 8%? You're going to charge more, right? And that charging more means that it costs more, which means what? Inflation. That's inflation. So as the government raises the rates that they're paying on their treasuries, that means they're taking in your money, which is the money they gave out during COVID. They're taking in your money. They're shrinking the money supply so that there's less money out there for you to buy stuff. Who's losing in this? Banks are losing in this because they can't pay what the Federal Reserve is doing right now based on the holdings that they currently have. Companies can't pay that high a debt. They don't have carrying costs. They've been so addicted to the free money out there that they're in trouble. So as the Fed raises interest rates, it's having second and third tier effects on the economy. The problem is they don't happen very fast. They take a while. And as we know, other things can happen in that time that it takes for these lags to hit, like OpenAI coming out and creating havoc in the job market, banks failing, and not being properly, I think, supported by the Fed. But don't worry, everything's okay here. Thanks for watching. If you like this content, you can find me on Money in the Bank with Frank on all of your favorite podcast platforms, on Facebook, on LinkedIn, on our YouTube channel. Look forward to bringing you more content like this in the future. Thanks.